Hi, Warriors. How you doing today? Events in the market today. Called this a pretty important event. U.S. dollar yen taking out the high from late April. So if you look at a weekly, that's been, the highest level for a long time. So I don't know if it's historic. I'd have to go back to the monthly. But we are taking out the highs here. Okay. Look at the weekly RSIs diverging. Look at the daily RSI. If it stops around here, is diverging, and a little bit of still diverging, but over 80 on the 4 hour, but maybe turning down. So there's a reason I took the handle Forex Stop Hunter, and I looked for stops. I learned about it on the floor, and to me, I've just been waiting this week for the end to take out this high. Now, this high is 60.23, right? So everyone who got short here, people say, how do you know where the stops are? And I go, well, they're where everyone else's are. And that was be over, swing highs and swing lows. So people at stops over 23, they're stopped out at 24. The market's currently trading 60.26. So I am probing this for the potential that it's a stop hunt. And even if it's not the top, the final top, that they've shaken out the bears. And let's see if they could get something going to the downside. I put the trade out in the room and see if we could maybe get some kind of pullback to maybe take the stops out here at 58.5. The other feature is, you guys know I've been bearish Canada, and this is why I talk about taking partial profits. We've had a pretty good decline since Canada eased and cut rates. So, you've had opportunities to take partial profits. The main point here being that we attacked the 136 level again. So here's once, twice, three times. If I go back a little further, it could be more. So, the question traders have is on this little reversal that we had here at 36 once more, and you even have moving averages coming in here. Is this a low for a launch to new highs over 138.5, or is the floor becoming less stable by the market dropping bowling balls on the floor, or the cracks beginning to show? My contention is that next time through 136, we're going to accelerate, and the next major target is 32. So you could look for another rally to sell, to add on. I'm just going to sit with a lot of the things that I have going into the weekend with what we have going on with French elections, which is only part one, not part two, which now brings me to the euro. So Monday, I thought maybe that was it. We had a double bottom, but here we are. We're about to attack last week's lows and the prior week's lows. So the only thing that's going to save the euro right here is going to be, now that we're making new lows, is to have a reversal back to the upside in the next couple days. Because I talked about this 2 weeks ago. Well, last week before we rallied Monday, and I thought that might have been it. So we're about to take out the lows from both of these levels. That's 106.67. That's 8 pips away. And last week it was 71. So we're almost there. So now what the euro has to do, and it's probably a long shot, is turn good and reverse and take out last week's high, which it didn't do. So I'm just going to keep my stops below 106 on euro, maybe even not go home with euro, but stick with shorts. I'll make that determination by Friday in Canada. and maybe the yen and the Dixie. So I don't have to have euro exposure because the Dixie is mainly the euro, and I'm going to stick with my stops over 106.50, because if we take this out, I think we're going to have a dollar breakout and we could trade up towards 108. So a lot's going to be dependent upon what happens over the weekend and what the action is like um, the next 2 days in the market. Now, last week I called for a low in cable at 26.22. Again, stressing taking partial profits. So here was 26.20. You had about 90 pips to take something off this. Looks like we might be headed for a third drive here. Here's one, here's two, here's three. And they're trying to shake out dollar bears and shake the trees. Perhaps we just get one more shot down under 26.20 that also diverges. There is a good side of dollar strength. You know, we're getting this continued decline in the gold market, which and the silver, not as much so today, but that is going to set up the buying opportunity in the miners that I've been talking about. Um, Looks like we're going to come in uh, about 30 cents lower on GDX. Uh, Newmont's rolled over pretty good, so you know we're going to get these breaks to buy. Again, I'm focused on GDX as a tell for where I'm going to start buying other miners. So GDX, I'm thinking has a shot to trade all the way back down towards minimum 31.58, which is halfway back. And I like this area, this 30.20, because 30.18 is 61.8 back. We're getting a little bounce in yields here. I don't expect it to be long-lived. I don't think this is an important low, and we're just going to blast over 475. I think, you know, we could do 435, maybe 443, but this is a very important demarcation line in the 10-year yield, 420, which if we break down, just measured off this high at 74, is going to take you to 365 back under these lows. So I still think that yields popping a little bit is still a buying opportunity in TLT. We'll see if we can hold the 93. If not, we're going to probably have a buying opportunity around the 92 to 91 level. I'm still constructive bonds despite this bounce. For several weeks, I was talking about that the indices could make new highs, which the S&Ps did. They look negative to me. NASDAQ, it looks negative to me. You guys know I'm in SQQ. We'll see what happens there. But my point being was I was looking for a high, new highs in S&P and NASDAQ without the Dow. Go back and look at what I've been saying for the last couple of weeks. It's exactly what happened. Harmonic people would call this a Gartley pattern up here. Here's your uptrend. So the Dow is a weakness. It could not make a new high. I also think on any bounce that NVDA has more downside left in it. That where are we? Okay, called a little bit lower, but and you know any rally, if we got some continuation strength in NVIDIA, I think could be faded, and that we're headed down towards 103. So any rally I'm looking for is a failing rally. I also talked about waiting, using market strength to see if Amazon could make a new high, and it just missed it. It still could try it, but to me, this is a three drive to a top formation. Um, the financials couldn't do it. They're rolling over from lower levels, more like the Dow trade. So that's XLF for you. And just wanted to update you on the indices. So I have a couple of new positions. I'm buying risk off positions in uh, the short Dow, triple Dow. You could see it even clearly here on the ETF that we're not making new lows. And then if there was one more rally, the form I would like would be on the VIX. We're up a little bit here today, but if we had one more drive down towards 12, I'd be adding long vol if we got down there. So still waiting for lower prices in the miners. Bitcoin bounced back yesterday, but it's giving it back up. I still think we're going to this line here around 53 grand. And the dollar is going to resolve itself, I believe, probably by next week. We're up, still making new highs, but the yen is not accelerating with the dollar strengthening. So maybe we're going to have something there. WTI came off yesterday, but I think as long as we hold this 78 level, there's still chance for a continuation rally. And I believe gold really taking it on the chin. It's going to go for this 2280 level. I've been talking 2240 for a while. That looks real doable, especially if we get a breakout in the dollar. We're only about 45 points away. There's your dollar index. I'm wrong over these highs. So that's about it. That's what I have for you guys today. Um, Something that says that the dollar could be peaking is a correlation with the gold silver ratio, which looks to be just a bear flag and looks like it could be peaking out here. And this at times mimics the dollar much stronger than that, but we'll see if the gold silver ratio um, in favor of silver over gold continues to work. And I think that's about it. We'll see what happens with the dollar. It's a key, and perhaps we need a turn in the dollar to give the market one more lift. So, end of month, you have to keep that in mind, end of quarter, and then the elections this weekend. So, we're going to be good or bad in the dollar in a very short period of time. So, good hunting. I hope that some of these things that I talk about are things you write down and you learn about it. Today's lesson would be learning about a stop hunt, seeing a market take out a major level with minimal follow through so far. I mean, people that got stopped out here, um, right now they're going, well, yeah, I'm glad to be out. But if we get a failure from here, they'll end up being right the market, wrong the trade. That's happened to everybody. And the other lesson is when a market attacks levels multiple times, it weakens it. It does the same when it's when it's attacking resistance, and it's doing the same when it attacks support. So even though we bounced off this low, the fact that we revisited this low one more time builds my conviction, even if we get one more rally here, that 136 has destiny to be taken out, and then 132 would be next. So good hunting. Remember, don't just count your pips, count your blessings. Tomorrow I'll have at Urban Cowboy. That's going to be Michael Cow. If you're really an intellectual in the markets, you're going to want to hear Michael tomorrow and read his stuff. I feel like Forrest Gump when I read his stuff. So see everyone tomorrow for that, our special guest, Michael Cow. And I'm sure Mike's going to be with you in the next hour and a half or so. And that's a wrap for me. Thanks for your listening. And if you have any questions, you could post them under the video. I always look at them. Any thing that you didn't understand, I'll do my best to clarify. So adios, everyone. See you in the room. I post ideas there as well as Mike and Alexis. Adios.